The future of digital banking in commercial space, the cash flow problem. Hello everyone, my name is Patralek and today we'll be talking about how we can solve the cash flow problem of small and medium enterprises with digital banking. So what we are going to talk about is future of digital banking for commercial clients to solve for the cash flow management. It's an exciting time to be in the financial industries, particularly in the digital banking space. Over the past decade, we have seen unprecedented evolution with a rapid advancement in technologies reshaping how we deliver financial services and how businesses engage with their banking partners. But as a technologist, I believe we are still at the beginning of what digital banking can achieve, especially in the commercial space. Today, I want to talk about how digital banking is evolving and what banks should do to stay ahead of the curve. We all agree digital banking has come a long way. Until now, we were mainly focusing on moving physical services to the digital platforms. Think about online transactions, mobile banking, remote management, all incredible innovations, but largely focused on digitization. In this phase, that is the previous phase, convenience was the key driver. But now we are moving towards a new era where digital banking is not just about convenience, but how intelligent and data driven experience can be provided. It's about delivering real time, personalized solutions and anticipate the needs of business rather than responding to them. For commercial banking, the stakes are even higher. Companies today need more than just banking services. What they need is financial partners that can integrate deeply into their operations, providing insights that can help them optimize their cash flow, manage risks, and grow strategically. The future of digital banking will be about enabling these capabilities seamlessly, powered by technologies like AI, machine learning, blockchain, and real time analytics. Meet GTech Manufacturing, a mid sized company specializing in electronic components. The business is booming, their sales are up, right? And they have products ready to ship. No issues with their supply chain, no issue with their vendors. Everything is coming in time. But at the end of the month, they don't have enough cash to run the payroll, to pay to their suppliers, and to cover their operational costs. So basically, they are struggling with this cash flow management. Now, you might be wondering that when the business is booming, when the sales are up, why is there a cash flow problem? Basically, the problem is with the management of cash flow. And let's see how digital banking can help them solve this problem. So, you're aware of the payment terms, right? So, what happened is you have two major types of people or organizations that you're dealing with, or this GTech manufacturing is dealing with. One is their suppliers from whom they procure things and they make the payments. And second is the customers who buy finished products of GTech Industries and then they release the payment or they make payment to GTech manufacturing. Now, what happens is if the product is delivered here, right? The customer is not paying here. The customer will have something like 30 days, 60 days, 90 days, or sometimes even more. So when the product is delivered here, GTech is not going to get the money here. GTech is not going to get the money here. So this is 30 days, this is 0 day. The customer is going to pay somewhere here, which is 60 day, or might be 90 day, right? And now, what about the suppliers? The suppliers, if GTech Manufacturing has a payment term of 30 days with its suppliers, what will happen is the supplier must have given the inputs or the raw materials here much before this 0th day of delivery. And say they had a 30-day payment term. So now, as soon as it comes here, the supplier starts asking money. But GTech Manufacturing has not got that money from the customer, and it's not going to get here, it's not going to get here, might be it's going to get here. So there is a lag of 60 days, right? And that is where the cash flow management is becoming a problem. What is happening is the account receivable, or the AR, the money that GTech is going to receive in its account, AR, account receivable, and account payable, AP, which is account payable, which is what GTech has to pay somebody else, they are not in sync, or they are not being managed properly. Right? Now this is what, so this delta, this is the cash shortage. The consequence of poor cash flow management. The consequence is GTech Industries is now kind of being forced to take a short-term loan, right? And this will be costing them a lot of money as interest. The CFO is having sleepless nights because they are not able to pay to their employees, and that stress is building up, and they wanted to say make some investment. They wanted to upgrade their equipments, right? So they wanted to upgrade. Now this decision has to be delayed because they don't have enough cash. And what is happening is the CFO at any time, who is looking at all this cash related things, is under a lot of stress just because they do not know what amount of cash they have at what point in time. Managing this whole thing is a mess. And what currently they are doing is they are looking at it from a reactive perspective, in a reactive manner. So when they are on day 0, that is when they know that they have a cash problem and how much problem that is. Right? So this cash flow stress is what the CFO is dealing with. So the cash flow stress is what this CFO is dealing with. A very frustrated CFO, all the time, not able to sleep. This is where we enter into what digital banking can do to solve the cash flow management issue. Now, what if there is a way for GTech to predict the cash flow shortage, or rather, their banking partner provides them with a platform that helps them predict this and know well in advance that this is the scenario that is going to happen, and also suggest what are the you know steps GTech manufacturing can take to avoid or minimize the impact of those kind of things. So basically, prepare the CFO much in advance so that you know some actions can be taken. And in fact, the banking partner can help with those actions as well, right? So what we are talking about is a AI-driven cash flow management, which is giving them real-time insights, predictive analytics, and automated recommendations for coming out of this scenario. Real-time cash flow monitoring. So this AI platform that the digital banking will have, the first thing they have to do is bring the accounting software and the bank account together. So whatever accounting software GTech manufacturing is using, that and this bank account statement or bank account platform, they both have to come on the same platform. That's the first thing we have to do, because this is where all the accounting is there, and this is where the actual money intake and outgoing is there, right? So this is the books and this is the actuals, right? Now, if both of them come in the same place, then then our CFO does not have to wait for the month end to understand, what where they are with respect to the cash flow. So they are able to see in real time, what is there in their books and what is there in their bank account. So this is the very first thing where we are, bringing together the inflow and outflow and updating it in real time for the CFOs to see. So now, finally, the CFO says, "Now I understand where I currently stand." Right? Predictive analytics to anticipate cash flow gaps. This will be the second thing. So what this AI system will do is it will look at whatever is going to happen in the future and predict. Say, for example, the system gets to know that a particular payment from a large customer is going to be delayed. So it was supposedly happening on day 30th, but now it is going to happen on day 45th, or it was supposed to happen on 60th day, and now it is going to happen on 90th day. Now, looking at that and looking at when they have to run their payroll and pay to their suppliers and all the operational costs and stuff, the system, the AI system, sends an alert message saying in 45 days you have a cash deficit or a cash shortage. And it also tells how much that shortage is. Say that is going to be $20K short. Okay. Now, the CFO at least knows that in 45 days, this is the cash shortage that is going to hit. The system not only gives prediction of the shortage, it also gives some recommendation steps. So the first thing that the system suggests is arrange for this shortage amount, that is 20K, as a short-term loan, and now you have 45 days. So in these 45 days you can either negotiate well with your bank, or might be look at some other banks to get this short-term loan at a good interest, right? The second option that the system suggests is to this very same client, client A, who is now going to delay the payment, make an offer that if you pay me early instead of paying here, if you pay me here, I give you a 2% discount. Now, if that is the case, what happens is you pay a discount of 2%, but now you don't have to take this loan and you save on this 5%. You don't pay this 5% um, to the lender, right? It can also suggest other things, something like, okay, client B is a client which is sitting on a lot of cash, right? Instead of trying to negotiate with this client who is supposed to pay, and you're trying to give this discount, might be you can reach out to that other client or other two clients or three clients, give them this or even lower rate of interest and get that cash, right? So it can give a lot of other recommendations, so whatever is possible. And what it is doing is it is acting as the financial partner. So the digital bank or digital banking feature, cash flow management, is working with the customer, the digital banking customer, and helping resolve this cash shortage. So now this problem is solved, this problem is sorted, and the CFO is happy. But the CFO had another issue. They wanted to make some investment, they wanted to buy or upgrade the equipment, right? We looked at this. Now, this equipment upgrade is going to cost the CFO 200K. And the CFO doesn't know if they can make this investment or when they can make this investment. So now, in the cash flow management, let's have another feature, and we'll call this feature as the scenario planning. So we have a tool inside our cash flow management platform, which is scenario planning tool. Now, in this scenario planning tool, the CFO goes into this tool and says that, okay, I want to make an investment of 200K. Now, what are my options? When should I do that? Right. The AI goes in, looks at all the bank accounts and reconciliations, and what will be the payments in next 30 days, 60 days, 90 days. It does all that, and then comes back and tells the CFO that while you are might be short on cash, you are still managing these things and stuff, there are these other pockets from where, or these are some other pockets where you are making some expenses, and these expenses can be delayed. Now, since this is strategic, you can delay these four items, and from those four items you can get this 200K, right? The scenario planning tool will act as a strategic consultant to the CFO, and the CFO can get a lot of benefit out of it. So put that value in the tool, and the tool tells you whether you can make this investment or not, if you can make this investment, when you can make this investment, and to make that investment even when you don't have enough cash, what are your options to either get that cash or to manage that cash and mitigate any kind of risk. With help of AI driven cash flow management, um, GTech no longer is scrambling for the cash every month. They have eliminated the emergency loans. They're able to make investments with confidence, and the CFO can sleep better at night, and they know that this this digital banking partner is watching out for their cash flow and doing everything that has to be done. So now we have a happy CFO. Right? So this is how digital banking can help. So cash flow problems are thing of past for GTech, and they don't have to be a problem for your business either. With AI driven cash flow management, businesses can move from reacting to a problem to anticipating and solving them even before they happen. It's not just about tracking your cash, it's about optimizing your financial health so that you can focus on the growth of your business. Thanks for watching, and I'll be making another use case and what can be the next feature of digital banking for the commercial clients. Please subscribe to my channel if you haven't done that already, and let me know in the comments if there's something specific that I can cover that is going to be beneficial for you. Thank you.